All right, guys, you guys ready to get back to work tonight? We got one more day left. This party's not over just yet. Thursday evening, it's May 13th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Friday's trading session. I got a great video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the S&P, the Nasdaq, and we get the gold on our radar for tomorrow. Speaking of tomorrow, a Friday trading session. Got a smaller window of opportunity. Got some ranges on the charts tonight. So, of course, we're thinking breakouts. We're thinking fake out breakouts, right? Trading failures, trading breakouts tomorrow. And we get some big news on the schedule tomorrow to kind of kick the session off into gear tomorrow morning. Of course, got a bunch of great setups we're tracking for Friday's trading session. I'm going to clue you into all the details in this video. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss not tomorrow's, but next week's newsletter. So make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And if you have any questions for me tonight, you can always drop those questions for me in the comments section. I would love to answer all your questions if you got them, so don't be afraid to ask questions. And as always, I appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it, do me a big favor, hit that like button, that thumbs up here on this video newsletter. Always appreciate you guys help supporting this channel by subscribing, dropping those questions in the comment section, and thumbs up if you guys know the content here on this YouTube channel. But enough of the intro, though. Time is ticking. Friday is right around the corner. We're getting ready to wrap up this second week of the month of May. Now, look at the charts here. You can see ranges, right? Get a range on the S&P, a range on the Nasdaq, and a range on the gold. Now, it's not that big of a surprise. We've had a very, very busy week this week, and we may continue to see some ranges as we go into tomorrow's trading session. But anytime I have trading ranges, there are two things I'm looking for. I'm looking for failure patterns, and I'm looking for breakout patterns. The bulls have control for the most part here on the E-mini. I've been looking for opportunities to buy below that trading range. I'll also be looking for breakouts going higher here on the S&P, and of course I'll be open-minded to some sell setups here tomorrow as well. But my favorite trades on the S&P right now will be buying the low of that range or buying those breakouts. Same basic idea here on the Nasdaq. Nasdaq is also bullish into a trading range. I'd love to pick some bottoms off support levels below the range. I would love to get some breakouts going higher here in the Nasdaq. And of course, if we get a chance to, we'll gladly trade this thing short if we can get some good setups to the short side tomorrow. Gold is kind of an interesting one here right now. Gold's kind of the oddball of the group. It is a range. We are above the trading range right now on the gold, but what you'll see in a moment is we've got a bunch of resistance here overhead from a pendulum swing. When you combine that with the fact that we never really got off the moving average today, I think the better side right now in the gold is the sell side. I've been looking for a chance to catch those buyers on the wrong side of the market on the gold. And at the same time, there definitely is some short-term bullishness on the gold. So I will definitely be open-minded for breakout patterns going higher here. So I think we can definitely get on both sides of the market on the gold. I got a couple really good setups, though, I think you'll find interesting as we go into Friday's trading session. So we're thinking failure patterns, we're thinking breakout patterns, and again, on the gold here, a little bit of a curveball here as we go into Friday. Now, speaking of Friday, tomorrow morning, let's make sure we know exactly what's on our radar tomorrow, because as I mentioned earlier on throughout the week here on this video newsletter, the last couple days got a bunch of big news on our schedule, right? We had the CPI report on Wednesday, the PPI report on Thursday. We wrap up the trifecta of the big news reports this week with the retail sales number tomorrow morning at 8:30 Eastern time. We definitely do have two big Red Star news events. You got retail sales and you've got industrial production. But I'll tell you, both of these will be on our radar tomorrow morning in our trade room. You get the retail sales number. The last time we heard from the retail sales number, it just crushed all expectations. Most of that was probably because of stimulus cash injections into our bank accounts, right? right? So we have to expect this number tomorrow will be on everyone's mind, because without this stimulus cash, do those retail sales numbers continue to impress? That will probably be the biggest report tomorrow at 8:30 Eastern time, and that should get these markets moving for us relatively early. Later on in the morning, though, it's not difficult to think about why the industrial production number is also going to be an important milestone for tomorrow, right? Everyone's talking about manufacturing right now, kind of bringing back the manufacturing sector here in the U.S. We had a very robust manufacturing report this time last month. And again, right, once the reopening now, we're kind of a month or so out of the reopening process now. Stimulus cash isn't being injected, at least not right now. And so we'll be looking to see if those numbers continue to impress as well. Be looking at those closely here tomorrow. Now, keep in mind, right, we're not going to be trading the actual news tomorrow morning. We'll be trading the reaction to that news report, right? 8:30, of course, the retail sales number, industrial production at 9:15. So we definitely have quite a bit of market moving potential from those news events tomorrow. Again, we'll trade the reaction at 8:35, 8:40. Trade the reaction at 9:30, 9:45. And don't forget also, last reminder for tomorrow. Tomorrow is a Friday. Fridays are early in, early out. Definitely don't hit that snooze button too many times tomorrow morning. Make sure you get to your desk early. You got to have a good reason to be trading after 11 o'clock on a Friday morning, right? Not to say you can't hold open positions after 11 o'clock on a Friday, but after 11 a.m., you'll notice the price action will start to slow down. The personality will get a lot slower. Oftentimes, as of 10:45 Eastern time, things really start to taper off on a Friday morning. What I'll typically do is look for entries up until 10:45, 11 o'clock. If I have an open position, I can always leave that open over lunch or into the afternoon, but I'm always very hesitant because I am not at my best on a Friday afternoon, and the markets are a lot more, there's more of a gambler's mindset, right, in the markets on a Friday afternoon. So be careful if you're trading tomorrow afternoon. Again, early in, early out. And as always, guys, every morning, want to remind you guys, come out and join us every morning in our trade room, Monday through Friday. We're going to prep the strategy here tonight, and we'll trade that stuff together every day in our trade room. I'd love to have you there, right there with me. I'll put all of the membership information, all of the trade room links you guys need in the description of this YouTube video. So basically you grab that and get registered for our next trading session. Friday is coming right around the corner. We got some big news. Again, early in, early out. Grab that membership link and come out and trade it with us. You can find that in the description of the YouTube video, or it's a big button for you below this video tonight on the trading blog. Let's keep going though. How about some charts? Got the S&P is ready. Nasdaq's ready. Gold is ready. Lots of ranges. Relatively simple plan of attack. Looking for failures, looking for breakouts. Let's grab a look at the S&P here first. The key takeaway right now on the S&P is it's pretty much a bull market, as you can see, into a trading range. You could also call this a spike in channel as well. But for the most part, though, there's a range right in the middle of that chart, and that range will act as a magnet. I did find it pretty interesting this morning how the amount of the move below the range, or the amount of the move down, was exactly equal to the amount of the move up. We call these double ups. And once we saw that V bottom come off that low in the pre-market, it was relatively easy to anticipate, all right, big move down, big move back up, right? Those double ups, they do make very good targets in addition to your normal measured moves that we use in our trade room. So we're bullish, we're range bound. In a bull market, in a range market, I'm always looking for chances to buy at support levels below the trading range. That is where I'll be focused on finding the best entries for tomorrow. And of course, because it is a bull market, I am more than happy to trade breakouts as we go higher here as well. The sellers don't really have much momentum right now, so they're going to have to be careful. They've got to be very careful to get momentum back on their side before they start looking to get short here on this S&P. The sellers, of course, would love to go back down and retest those lows at 40.29. The buyers have a lot of open space overhead. We've had those big down days, those last couple days here, so there is potential for another big leg higher tomorrow. Specifically that 41.80 area overhead. That's that big range we came from not earlier this week, but late last week, right? Or I guess the end of April, early May. So that 41.80, that's definitely going to be on our radar here for the buyers tomorrow. The low of day from today, the short side target here for those sellers. Where would my favorite trades be here for tomorrow? Well, three of them off the top of my head here right now. I can think of three pretty reliable setups I'll be keeping an eye out for tomorrow. The first one is going to use this kind of what we call a spike in channel. Right, it's this kind of flat channel, right? We go up, we pull back, we get that higher high. I wouldn't mind being a buyer off the low of that channel. The one thing about that channel though is it's going to be very bearish when we get down below that low. You'll notice the market's rotating off the high of that channel. So of course, my first favorite trade for tomorrow would be, can we get down into those lows of that channel, anticipate those sellers coming in, getting short off the moving average, and then using those seller stop losses ultimately to buy into those stop losses, right, for a failure into pullback combination, right? That's kind of the first thing I'll be looking for here tomorrow, right? Imagine we pull back to the low of that channel, the bears come in, they try to get short off the moving average. We can then buy into those stop losses, and then don't forget, grab it on the pullback on the way back up to potentially here retest those highs of that channel. This would be a failure into pullback combination. We see a lot of combination setups in our trade room, and we talk quite about we talk quite a bit about those in our video classes here at School of Trade. My next favorite setup would be very similar, but it's more of a deep pullback. In this case, we're still going to use that spike in channel. Spike in channels are really powerful patterns because they tell us that there's a lot of times a lot of buyers coming in underneath the low of that kind of channel down there. So let's say, for example, we take a bigger nosedive here overnight, get down in kind of the base of that channel here. Now, I still want to be a buyer down here, and I'll talk about the sell side here in a moment. I still want to be a buyer down here, but the problem now is momentum. Momentum is going to be a lot stronger here for those bears. So in this situation, I'm going to give the bears the benefit of the doubt on this one now. Let them try twice now. Let them try once. Let them try twice. And keep in mind, guys, there's a couple different ways I can enter this trade. In this case, stops are hanging out right above that high. So one of the easiest ways to get long is just to buy right into those stop losses. Bears try twice now, again, because of the severity of that pullback. That is one of my favorite ways to do it. My favorite way to do this, though, is to draw a trend line off that low and look for that long off that trend line. So these are kind of two ways in which you can buy on that really deep pullback, right? Wait for the bears to try twice, use their stop losses as fuel, and just literally buy right into those stop losses, knowing that this range overhead is a magnet. Now, don't forget too, another follow-up entry off this is a trap entry as the market rallies higher. Now, these of course are great because you don't want to buy too high, but as the market, right, as the market fails off that low, traps in all those sellers, the market will oftentimes shoot higher on strength, and you won't get that pullback right away, right? Like I mentioned earlier, we usually get that failure into pullback combination here, right? Oftentimes, though, on these deep pullbacks, though, you're not going to get that failure into pullback combination. You'll oftentimes get that failure into trap combination on the opposite side, right? That is definitely going to be on my radar here. Kind of my second favorite setup or second favorite situation I want to trade here for tomorrow. It's called a nested failure pattern into a trap combination here. And then third, last but not least, and we'll cover some sell side here in a second here, would be a breakout, right? Breakout pattern is almost pretty easy to see coming a mile away, right? If we are able to hold this breakout running higher, what do we call these? We call these 1, 2, 3 breakout patterns. If I can get that 1, 2, 3 breakout, I don't want to buy way up here, but I would definitely want to buy that first pullback off the low of this channel. Now, keep in mind, right, I'm not going to just simply blindly buy that first pullback. My two favorite entry triggers are going to be things like bear traps off that low and seller failures off that low. And keep in mind, I'm not going to go into all those small details of the exact entry triggers that we use in our trade room. What I'll do is I'll use a faster time frame, like a 1,000 tick chart, right, to time the entries with those traps and those failures there. And not to worry, I'll go over more of those details in the free video classes here. What I'll do is I'll put a little link here for you guys. I cover all those smaller details about the actual entry techniques we use in our trade room on those faster time frames, right? I cover those details in our free trading course. So grab the little pop-up there in the upper right-hand corner. That'll give you the rundown of how we actually trigger the entries. You'll learn the entire three-step strategy. I'll send you lots of examples of how we apply that strategy to our favorite futures markets as part of that free trading course. So definitely grab that free course link that popped up there in the upper right-hand corner. And then that way, the next time we get a 1, 2, 3 breakout into a hidden channel pullback, you'll know how I'm actually going to be looking to trigger the entries off of that low, right? So 1, 2, 3 breakout. Would love to get that little pullback right off the low of that channel, bear traps, seller failures. And again, we've got a pretty good idea for where the market wants to go. One more thing too to keep in mind too is if the market does really race higher here, I always like to look for those 2-try breakout patterns. What happens is sometimes you'll see these really strong breakouts, you'll get a shallow pullback and a higher high in price. Once you get that shallow pullback, the shallow pullback creates a bunch of FOMO in the market. You know, nobody was able to get in on the nice deep pullback. And once we see that higher high, it confirms that trap. That trap is my favorite entries here. And again, imagine now we break out higher, shallow pullback, higher high in price. That trap is definitely on our radar. And at the same time, too, don't forget, right, I can always look for that entry off the low of that channel, too. Extra bonus points, right, for that channel. Not necessary. I will definitely be the first to tell you that. It's not necessary to have that channel there, but definitely does not hurt. So that's kind of my third, 3A, 3B, right, of my favorite entries as we go higher here. Next, last but not least here, right, how would I sell this market? What do you think? The first thing is I can't really be much of a seller if the market goes higher right now, because what should be happening is we should be rotating back and forth, right? We get the rotation up and down. We should be rotating down to those lows right now. If the market does keep going higher, that really tells me there's something bigger out there happening. I do not want to stand in front of that freight train. Now, what I could do is wait for that rotation down, come back up again, and then I can use one of those nested failures, right? Let's say we do get that long setup off of that low. We then complete that rotation back up at the high. I can then certainly start looking for the buyers trying once, the buyers trying twice. And on these kind of reversal patterns, I like to draw those trend lines off the low, trend lines off the high, and short that way, right? So that will be a little bit of a waiting game, obviously. And remember, we're still very bullish, so you want to give those buyers the benefit of the doubt, let them try a couple times, and then look for that second try, right, to collapse back down into that trading range. At the same time, let's say, for example, we make our way down to the low of that trading range. The bears could easily hold on to this pullback and run. Again, I'm going to be waiting to see if these bears will fail off the moving average. If they do, I'll be looking for that buy back up again. But at the same time, though, if we get some news overnight, whatever happens overnight, right, may end up with that 1, 2, 3 reversal. This would also be a 1, 2, 3 breakout pattern as well. Now remember, it's not the strength of the first leg that matters. We see a lot of real strong, what looks to be like a successful breakout, but breakouts will break your heart, right? Most of them will fail. So most of them are going to come back. They're going to fail and go back up into that range magnet overhead. If for some reason the bears can hold it, right, good for them. I'm not going to trade that first pullback, but I will gladly look for that first pullback after we get a successful breakout, right? And again, what do we call these? We call these 1, 2, 3 breakouts into hidden channel pullbacks. I'll be looking for shorts off the top of that channel. And again, in a bear market, the most common setups are going to be bull trap entries, buyer failure entries, and those failures oftentimes turn into those pullback, right, combinations. Again, I'm not going to be able to go into all those small details right now. Again, think about applying those entry setups on a faster time frame. I'll go over all those details again in that free course I popped up there in the upper right-hand corner. And then I got to say, if we were to find ourselves all the way back down at those lows, I think it would be a great time to look for another one of those nested reversals, right? Bears try once, bears try twice. Oftentimes those failures will then turn into hidden channel pullbacks. So there's a lot we can do with this tomorrow, right? Again, let the bears try a couple times. Once we take out those lows, draw that trend line, right? That'd be a great buy, right? I have no problem being a buyer as long as I'm buying off a major turning point and as long as I allow those sellers to kind of wrap that rope around their neck. You know what I mean? Let them try a few times. That way their stop losses can be used as fuel and I can buy right into those stops. And then again, right, remember that first pullback is a really great entry, right? That kind of roll lower, bears once, bears twice, buying that failure, and then whoop, right, buying it as it rolls back up, right, into that trading range above. We'll cover more of this obviously in our trade room tomorrow morning, but those are some of the ideas I have here on my radar for tomorrow. I'm sure there are going to be a couple things I might have missed here tonight, but we'll fill in all the blanks tomorrow morning in the trade room. Next up here, how about some Nasdaq? Now Nasdaq is very similar to the S&P, but you can see right away the Nasdaq is a little bit more loose, I think the word would be, right? A lot more momentum swings back and forth right now on the Nasdaq. You can definitely see that range in the middle, but man, oh man, it's just I look at this market and it kind of feels like it's on ice. You know what I mean? Nothing's really holding. The market's running higher, running lower, running higher, running lower. You know what I mean? It's almost like you're driving around on black ice. You know what I mean? It's very loose as I kind of describe it. It's not holding the turns. It's not holding levels of support and resistance very well. And when I see stuff like this, it always kind of reminds me that those momentum swings back and forth can really be dangerous because it's tough to time the entries, right? When you get these big swings down, big swings up, big swings down, these are mini trends, right? It's trending down. No, it's trending up. No, now it's trending down, right? It can be very difficult to trade these types of markets. So when I see, again, there's a range here. There's definitely a little bit, it's definitely a little more bullish than bearish right now. But when I see markets that are really wide moves like this, the first thing I think of is momentum. And I'm going to have to really be careful not to get in too early. And so I'll be using what we call those nested entries here tomorrow morning on a market like this, right? So what do we know right now on the Nasdaq? The key takeaway here is it is a range. That range right in the middle is going to be a magnet. One of the big clues we have is how bearish that last move down is, right? Again, it is very bullish overall, but you'll notice though, right? It's difficult. Well, we use the moving average in our trade room to tell us who has control of momentum. So if you think about it, the buyers, of course, right? Say the buyers are jumping off the moving average there. The buyers have control of the market. But then notice over here, the bears jump off the moving average there, right? The bears take control of the market there. Now look right here. Have the buyers jumped off the moving average? No, they haven't, right? They haven't. They tried, but they haven't. So again, the buyers have control when they're jumping off the moving average. The bears, very important here, the bears take back control when they jump off the moving average. And now it's up to the buyers to take that control back, or else at this point, I have to assume the sellers have that slight edge in momentum. Again, it's very wide swings right now. So again, we're we're definitely a little more bullish overall, but in the short term, the bears definitely have that little bit of the edge because again, the bears were the last one to pick up the ball and run with it. I kind of think of it like American football, right? Where when one team has control of the ball, the other team has to take it away, right? That's kind of the way I look at it when it comes to using the moving average. So, long story short, that is going to play into how I trade this for tomorrow. For example, like on the S&P, right? On the S&P, I want to buy, well, same thing with Nasdaq, right? The range overhead is the magnet. I want to buy at support levels below the range, right? I want to buy this level. I want to buy that level. I want to buy this level, right? Buy that level. The hard part, though, is momentum. So the best way to absorb that momentum, I can't really just rely on a failure pattern for that. I want to rely on what we call those nested failures. So really when it comes to Nasdaq, you got to be thinking nested entries tomorrow, right? As we go lower here, and this could be off the low of the channel. This could be off that expanding triangle. I really like this spot right here. If I had it my way tomorrow, it'd be buying off of that area right there. I like that area a lot because you can see, right? It's under the range. It gives me a nice risk-reward ratio. The problem, though, is, again, no matter where we go down here, right? It could be this level, could be this level, could be this level, could be this level. It could be way down here. Right? It could be. The best way to safely trade it is going to be let those bears tire themselves out. And again, I'm not doing this on a 4,000 tick chart, right? Like I see in the upper left-hand corner here now. I'll drill down on this to an 800 tick chart, give or take, depending on volume tomorrow morning. Look for these entry setups and then get that, right, that long going up overhead, right? Now, a couple variations of this, right? If we get a shallow pullback on this, I'll want one, I'll want two, and I want that trap. Right? This is the same idea, right? It's just, again, we know the bears have that slight edge at a support level here. That's a great looking, again, nested failure. But again, I would look for a trap entry on this one. Why? Because I'm a little bit too close to being inside that trading range. Right? If I go a little bit lower here, now that's not so much a problem. Now what I can do is I can grab the one, wait for the two. Right? Again, I love those trend lines. I love buying the stops, right? And remember, don't forget, watch those reversals into those hidden channel pullbacks, right? That will be a great follow-up there. So again, let the bears try a few times down here. Their stops begin to act as fuel now, right? Remember the range overhead. And of course, we now mark up that low, or should I say, draw that trend line. I can buy off that trend line, right? I can buy, of course, into stop losses, and I can buy that pullback. Failure into pullback, failure into trap combination coming off of that low. And, honestly, too, even if we do make that all the way back down, take out those lows. The market's very bearish at that point, but at the same time, though, I'm not going to sell down here, right? It will not be very easy to sell down there. We're selling right into those lows. Not a very good spot to get short down there. What I would rather do is see those bears try to get short a few times. Once they do try to get short a couple times, now you know exactly where their pain points are, and now you can just buy right into those stop losses. Once those bears have tried a couple times now, again, maybe I get lucky, get that trend line entry. Maybe we buy in those stops up there, and again, mark that high, mark that low, look for that rally coming off that first pullback. Those are great reversals, right, off of that low. So again, you'll notice they're all what we call nested entries, right? There's two tries there, right? There's a try inside of a try. That's the most important part of that, because you want to absorb that market's momentum. And I realize, again, I'm probably using some terminology that you may not be familiar with right now, but not to worry. I cover all those small details, like I said earlier, in that free trading course. So make sure you grab that. That way we can play along a little bit easier in our next video. The next one here is a lot like the S&P, right? If we do break out running higher here, if the market makes a strong run higher here now at this point, I would assume this market's going to break free of this trading range. It's going to probably be looking for a measured move. You'll notice I've drawn up this channel here as well, right? So, in all reality, with this much bearishness, we should be going down, taking out those lows and giving us a chance to buy off of those lows. If we don't get that move lower and the market runs higher here, that will be a very, very, it'll be a very good clue here that for whatever reason, right, the bears are losing their grip. Now, I mentioned this before, right? There are two ways I can trade this. One is, of course, I can look for that 1, 2, 3 breakout. And I can, of course, now, right, look for look for that first pullback off the low. What I would imagine is probably more likely, though, in this particular situation, would be that strong move up, that shallow pullback, that higher high in price, and that trap, just because of the way the Nasdaq works. Nasdaq's a little bit different market, right, than the S&P here. So that definitely is a good setup for us tomorrow as well. So again, as we go higher, 1, 2, 3 breakout. Mark that high. Remember, I'm not going to buy the first pullback here, not inside the range here. But if I can see a real strong run higher here, anytime we see a real strong move in one direction, we know the odds are pretty good they're going to get that pullback and retest that high, right? They may not go forever, right? But that pullback is pretty darn reliable. So I'll look for that entry. Again, it's not going to be a blind entry, right? It'll be a failure setup. It'll be a bear trap setup on a faster time frame. We'll cover those details in our free trading course. So now I've kind of got this thing as it goes lower, right? As it goes higher, and again, it may end up being a 2-try trap up there as well, right? So either one of those will work. How do I sell this market right now? That's kind of the tricky one, right? How do I sell it? So first of all, if we do take out these highs, that will complete the pendulum swing. So one thing I'll be looking for tomorrow is to get short on this thing. If we do end up, let's say we do end up taking the high out, but now instead of continuing to go through, right, we 1 try for the buyers, 2 try for the buyers, right? Mark that low, mark that high. That's a great looking short right there, right? Yes, it is going to be a very bullish market at that time, but again, remember the width of these swings, right? The volatility of this market is extreme, so momentum is always going to be pretty strong no matter what direction we're getting in, either buying or selling. The key is going to be, let's complete that retest of the high, let those buyers try a couple times, get those lower lows. That's the key, right? Lower lows, and then right, find that channel. If we get lucky, we can grab that trap above that high. But once those buyers try twice here, though, with those lower lows, there are bears coming in, right, trying to short this thing using that range as the magnet. The hardest part here right now is going to be selling this thing if it goes lower, because in order for me to kind of get through these areas of support, right? I mean, in order for me to kind of get out of that range magnet, I'm going to be running right into that major low. And let's face it, right? That low right there, there's probably, there's probably a half dozen other little tiny swings down. You know what I mean? So it's like it's difficult to look at this low and say that's the low, right? It could definitely easily be this is the actual low right there. You could probably look at this and say, you know what? This is almost like, right, a whole support level or whole support range area down there. So, it's going to be very difficult to justify being a seller down there unless we can get a lot of strength, right? We got to get some momentum. And that could easily happen. We've seen some very strong moves so far this week here. My big thing, though, is we're going to have to get down underneath this trading range, really make sure we clear underneath this area here. And then once we get that pullback, the bears are going to have to show us they want more. They're going to have to give us that 1, 2, 3 breakout. And this breakout, right, that, again, the first leg has nothing to do with it, right? I don't care how strong that first leg is. There's all kinds of big pullbacks in range markets that go right back up into the range again. So I'm not gonna sell that first pullback. But once I see that real strong jump off the moving average there, then these bears are going, all right, we're done with this range. We're looking for something else here. I can mark up that low, mark up that high. And again, looking for one of my entry triggers we talk about in the free course. I'm looking for that off the high of that channel. Where do we think this market, if it was to break free of this range here and take out those lows, I would definitely be thinking a 12, 7, 11 tomorrow. There's a little guy down here at 872, but if we can get this one to go and start to really, right, stretch our legs going lower here, that 12, 7, 11 area, and then from there we've got, I believe, one more down here. 12, 2, 9, 7. Very, 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 very big space down there. But that 12, 7, 11 would be where, again, that's assuming that we don't just end up down at this low and 1 try, 2 try, and right back up again into that trading range, right? take out those lows, hold that pullback, and go. Once we get that, then I know it's on the downside. I'll find my way in at the top of that channel from there. All right, guys. So Nasdaq, again, looking pretty good here for tomorrow. Obviously, a ton of opportunity to the upside right now just because of those big down days we saw earlier this week. Just don't force those breakouts right now. Wait for those breakout patterns. Trade those traps. Trade those first tests of those channels. And again, we'll do this together tomorrow morning in the trade room to make sure you're doing it the right way. Let's keep going here. Wrapping things up here tonight on the gold. Gold is probably the most interesting of the charts we have here. Nasdaq's not too shabby either, right? Nasdaq's got those wild, wide ranges right now, or wild swings right now. Gold is kind of interesting. It was a ugly, rangy day today. The range was pretty much baked in right from the beginning. You'll notice what happened. The market went below that trading range and then just grinded its way higher all the way to, surprise, to complete the pendulum swing. Remember that ranges are balanced markets, right? Ranges are balanced markets. So the amount of the move below the range is oftentimes the amount of the move above the range. This creates a big deal. This creates a big level of resistance overhead. And, to be honest with you, that range now, that magnetic pull is still in play. The way that I think about a pendulum swing is almost like the Earth and orbit, right? Or the atmosphere around planet Earth, right? We've got this magnetic field that draws things back down into the trading range, right? Just like SpaceX and my buddy Elon, right? They put those big rocket launchers to blast their rockets out of the gravitational pull of the planet. That's exactly what a breakout has to do. A breakout has to punch itself far enough away from that range to kind of get outside of that magnetic pull. We are not there right now, right? We are at the very edge of that kind of atmosphere, right? Or I'm not much of a rocket ship guy myself, but I find the videos on YouTube pretty cool. But hopefully that metaphor, that analogy, right, kind of works for you. The next thing that I think is really powerful here is the moving average, right? Now look. The bears here, or I shouldn't say that, the range. Let's see. What's the best way to explain this? We talked about how on the Nasdaq, how whoever grabs the moving average takes control, right? So you can see down here, right? So see how the bears get some nice jumps off the moving average there. Now the bears clearly get some good separation away from the EMA. Look right here. You'll notice. I'll tell you, for a potential reversal, that's not a very strong breakout, right? Not a very strong break away from the moving average. In fact, the first thing I notice when I see this market is this looks like a flag, right? Get that big bear move down yesterday. It's a very grindy move. Guys, when you get a reversal in a big bear move down like yesterday, right? When the market reverses, it doesn't just hang out around the moving average. No, it jumps and runs, right? That's where the term short squeeze comes from, right? Short covering rally. This does not smell like a reversal right now. And so the moving average combined with the location of the pendulum swing, I think is a really big clue. And it's what makes me want to get short right now rather than getting long, right? The big thing for me is if these buyers really took control of this market, they would have gone 1, 2, go, right? Or this one would have gone. You know what I mean? It would have jumped off the moving average. We would be up around this 1836 range high, right? If it was a bull market right now. If the bears really lost their grip, we would have already been well up, right? Well, we would have snapped back up into that trading range above us. Right? Because there's a range right above us. That range is also a magnet. So, again, we're definitely seeing higher highs and higher lows right now, but it's difficult for me to justify being a buyer on this, at least right now. And so this, I think, is a really valuable lesson for you to learn here, because it's not necessarily higher highs and lower lows that make it a bull market. For example, like I said earlier, it kind of feels like a flag, right? What's a flag? A strong move down, and we see this grindy move higher, right? That's what flags are. right? It becomes a reversal. It becomes a reversal once it jumps, right? Once it actually jumps off that moving average. This is a flag, right? And we know that most flags, what happens, right? It ends up crashing back down in again. So that's kind of what I'm looking for here on this gold. So I hope I didn't waste too much of the time on this, kind of talking that through. But the pendulum swing right now, the pendulum swing on the other side of this trading range, combine that with this lack of follow through, right? This lack of excitement, this lack of separation off the moving average. Okay, now, how do I sell it now? Well, there's two things you want to do. You want to put yourself in the shoes of the buyers and think about, if I was a buyer right now, where would I want to buy, right? Because you know this looks like a bull market, right? It does, doesn't it? I mean, it looks like a bull market, higher highs, higher lows. That's kind of the first thing. I want to anticipate, okay, if I was a buyer, where would I be buying? If this was your straight up trending market right now, I would draw a channel by drawing off that high. I would draw it off that low, and I'd be looking for a long right off of that low. That's how I would like to buy this. So that's what I'm going to look for. I'm going to look for the buyers to commit off somewhere around the low of that channel. Now, I have an idea of where. Now I got to think about, how do I time the entry properly? What's my concern? My concern is the buyers have, again, they've got good momentum. I don't think they've broken free of the atmosphere, right, of this range yet. So I want to give those buyers the benefit of the doubt. Let them try. You got it. Let them try twice, right? So as they go higher here, you'll notice the buyers have already tried once. I'd love to see us come right back down, right? Try again. I've already kind of drawn the trend line already for us. I'll mark that low. I'll mark that high. And I'm looking for that short, right, off of that high. We've talked about these patterns a couple times already, right? What are these called? They're called nested failures. They're not just your average failure pattern where we look for those buyers to try and we just simply sell into those stop losses. If you try to sell into those stops right now, it might work, but it's probably not going to work, right? Again, you get that channel there. It's just too easy for buyers to walk in here and try to eat your lunch. So what I'll do is I'll simply play that game against them and say, all right, if you want to come down and try to buy that pullback, which I would anticipate would happen, I'm going to mark up that low. I'm going to mark up that high, right? And I can short off that high. I can also look for a trap, right, above that high, right? Those are kind of two ways to play this game, right? The key, though, is we anticipate the buyers are here. We respect their momentum. Let them try a couple times and just be ready for that nice, juicy signal candle coming off of that high. That would be how I would like to sell this market, right, going back down into that trading range. Another thing to consider, if I kind of remove this, right, this trend line here, another thing to consider would be if we do end up back inside of that trading range now at this point now I can mark up levels overhead, specifically that, right, that hopefully falling resistance, and I can now look to combine those levels. Now, remember, now momentum's on my side. Now I'm not worried about the bulls anymore. The bulls have already lost their grip at this point now. Now what I can do is wait for those buyers to try to buy it again, and I can sell that way, right? Kind of my second favorite trade for tomorrow, right? So, and this may be a situation where we may get that nested failure, right? They may give us that nested failure. It collapses back down, and then again, right? Remember, you don't want to trade inside the range here. Market pops up. We've got the, oh, come on, Joe. We've got the trend line coming down, right? I'm marking up those prior swings. I'm combining failure patterns above the high of that trading range, getting short over here, right? That'd be a great setup as well. Again, trying to ride that rotation down to retest those lows. Now, speaking of which, right? What if we do end up back down around those lows? It could be late in the morning tomorrow. It could be a straight line down for all I care, right? If we do end up down at those lows now, I'd love to be a buyer off of those lows, but how do I do it though? Yeah, my concern is what? Momentum again, right? Momentum. Again, even if we take our time coming down, right? Even if it's kind of stair steps its way down right now. Yes, the range is a magnet, but a lot of momentum here on this. So what do? Right? You give the respect to the bears on this. You're at a good turning point down here. You get the range above you acting like a magnet. Just don't get in too early, right? Let the bears try a couple times again, right? And we can buy into those stop losses. All right. So looking for those failure setups, but remember though, when a market rotates from above that trading range all the way back down, that again, I do want to buy down there, but that momentum will be very, very strong. There's a big difference between a market that starts off inside of a range and rolls lower. I can take those failures all day long. But if this would have gone range bound up and then came down, then you want to give them the benefit of the doubt, let them try a couple times, use those nested failures as we go. So would love to be a buyer off the low of that trading range, but again, I got to be patient for it. Now, how do we buy this market as it goes higher here? I'll tell you, if the market goes higher here, we have a lot of upside potential here because you can see we now have potentially a big pendulum swing from the low of this big range. Right? Now, the buyers have to prove this to us right now, but it's not difficult to see how this could work, right? You've got this 1-2 go, that could easily be a new channel, and we're looking for that pullback, right, to buy off the low of that channel. That's a great setup, right? Again, at that point now, we've successfully broken free of that range magnetic field, and now can buy that pullback off of that low. And again, we're not just blindly buying it, right? We're using those bear traps, using those seller failure setups we talk about in the free trading course to get long, right, off of that low. What is also a very likely scenario here would be, let's say we go up into that trading range, we start going sideways here. What do? We find the range, we find levels of support below the range, and we use those failure patterns, right, to buy support levels below the range. Okay, failure patterns below the low of that trading range. It's a bull market, plenty of momentum. You can get aggressive buying underneath that low with those seller failures. Or maybe simply runs higher. We get that shallow pullback, that higher high in price. Traps, baby, right? Traps. So you can definitely, there's a lot of potential. Remember, don't forget, right? Added bonus, mark that high, mark that low. Again, not necessary, but man, oh man, what a great trade that is. That's a great setup. Again, very bullish at that point. We're not worried about this range anymore. And now all of that momentum now should be hunting for, those buyers will be hunting for that retest of those, right, of those big highs up there. So lots of potential here, both the buy side and the sell side here on the gold. Right now, I'm leaning on the sell side here. I'd like to be a seller first on the gold. We'll see if we can get that nested failure off the high. But, again, tomorrow we'll play it by ear. We'll see what we get. But we get some great setups here, not just on gold, right? Also, of course, on the S&P and the Nasdaq. Now, don't forget, tomorrow is a Friday trading session. So make sure you are on time tomorrow and every morning, of course, in our trade room. We open up every morning, 8 o'clock Eastern time. I would love to have you there trading right along with us. It's so much easier to learn to trade when you're doing it right along with us every morning. I'll put all of the membership links you guys need right in the description of this YouTube video. I'll also put a big button for you right below me tonight on the trading blog. Also, too, don't forget, you can always call the office. Don't be afraid to call the office. I'm always here. I'd be more than happy to answer your call, answer all your questions, help you get registered as a new member. It's very, very easy. Get a bunch of different options right now going on, some specials in the month of May. We've also got live chat on the left. I got live chat on the right, and you can always drop your questions if you got them in the comments section below. But that's it for me tonight, guys. Hope you guys enjoyed the video. Hope you learned a lot. Hope I'll see you tomorrow morning and every morning in our trade room. And as always, right, we'll come back and we'll do this again next week, Monday through Thursday evening on this video newsletter. Guys and gals, please do not forget to subscribe. Drop those questions if you got them, and thumbs up if you guys are the content here tonight on this video. But enough of me. I'm going to rest my voice. Be back tomorrow with the clients in the trade room. And of course, we'll come back next week for the next edition of our nightly newsletter. That's it, guys. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.